How it is stock reserve? Rate 100 plus rate. So stock reserve will goes to in favor of opening stock, closing stock, goods sent to branch, goods returned by the branch. For every 6 rupees invoice price, 1 rupees is the profit. Real cost is 5. Remember, goods sent to branch debit side in the branch account, stock reserve on the credit side. To opening stock on the debit side, stock reserve on the credit side. Goods returned to head office credit side, stock reserve debit side. Hello my dear student, I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. Today, I am going to hand Financial Accounting 2, second semester, Unit 1, Session 3, goes branch account. Now, I told in the last class, there are two types of account, with invoice, without invoice. Today, I am going to deal with invoice. With invoice means they will give the cost price, they will give the invoice price. How to deal in the branch account? I am going to say this is for 15 marks. 10 marks without invoice, 15 marks with invoice. How to deal the invoice? I will explain. We'll move on to the problem now. From the following detail, prepare Delhi branch account in the books of Jammu head office. Here, the goods are invoiced at cost plus 20% that I am going to explain. So they have given, they will give a stock on one means opening stock. IP means invoice price, petty cash opening, invoice price, debtor, furniture, rent prepaid, outstanding salary, cash sale, total sale. When you say total sale minus cash sale, difference is called credit sale. Goods sent to branch will come on the debit side. Goods returned to head office, that will come on the debit side. This is goods returned will come on the credit side. Goods sent to branch will come on the debit side. Then discount allowed will come in the debtor account. Bad debt will come in the debtor account. Goods returned by customers is nothing but sales return, that will come in the debtor account. Check sent to branch for expense. This is the expenditure met by the branch, paid by the head office for rent, for salary, for petty cash. Petty expenses paid by the branch at the end. This is a closing stock. This is a closing debtor. Depreciation on furniture. Okay. Now, I will explain here. The goods are invoiced at cost plus 20%. Goods are invoiced at cost plus 20%. Here we mean to say that if the cost is 100, profit is 20, 120 is called invoice paid. Cost rupees 100 plus profit rupees 20, 120 is the invoice price. What's the formula? Cost is 100, profit is 20, 120 is the invoice price. Formula is rate 100 plus rate. What's your rate? 20 plus 100 plus 20. This is 20 by 120. Nothing but 1/6. For every 6 rupees invoice price, 1 rupees is the profit. Real cost is 5. What is 6? Invoice price. 1 is the profit. So, when the invoice price is given, you have to calculate the word called stock reserve or loading. When you prepare the branch account, here. So, goods sent will become here. Goods returned will be here. For goods sent, no, we have to calculate stock reserve on opening stock. That is 1 by 6 into opening stock. We'll explain. Goods will be sent on invoice price. You have to calculate the stock reserve. 1 on opening stock. Next is goods sent to branch. Goods sent to branch. Stock reserve. Here, goods returned to head office. This is stock reserve. Stock reserve. You have to calculate goods returned to head office. And on closing stock. So the 4 items are goods will be sent to branch account debit side, stock reserve credit side. Then here first one goods sent to branch, stock reserve. Here opening stock, stock reserve. Goods return on the credit side, stock reserve on the debit side. Closing stock on the credit side, stock reserve on the debit side. How it will be? First one, opening stock debit side, stock reserve credit side. 2, goods sent to branch account debit side, stock reserve or loading on the credit side. By goods returned to head office credit side, stock reserve debit side. By closing stock credit side, stock reserve debit side. So this we have to do it when the invoice price is given to know the real cost, profit on the real cost. So here we have got stock at 20%. So rate is 20, 100 by 20 is 1 over 6. For every 6 rupees, 1 rupees is the profit. So you remember, goods sent to branch debit side in the branch account, stock reserve on the credit side. To opening stock on the debit side, stock reserve on the credit side. Goods returned to head office credit side, stock reserve debit side. Then here closing stock credit side, stock reserve debit side. We'll move on to problem now. Here, see the problem. Here, what we have, whatever the opening is there, that should be here. One is opening stock is there. We find that whether there is a closing stock. Come back. See that? You have got a closing stock. So no necessary of preparing the stock account. And come back. You have got a opening debtor. Have you got the closing debtor? See that. There is no closing debtor is there. But there is a total sales is there now. What is total sales? Total sales. What's your total sales? See that? Your total is 17,60,000 minus cash sales. What's your cash sales? See that? 11,20,000. Difference 6,40,000 is the credit sale. That will be affected in the debtor account. Total sale 17,60,000. Cash sale 11,20,000. Difference is 6,40,000 is the cash. When you say sale, it includes the cash sale as well as the credit sale. What's your cash sale? 11,20,000. Difference is 6,40,000 is the credit sale. Then we'll move on to problem now. If we see that you got a closing debtor is there. So what is missing? No, cash received from the customer is missing. That means you have to prepare debtor account. If you prepare the debtor account, true balance brought down, opening debtor. At the beginning of there, we have to receive from our customer how much money? 1,70,000. During the year, your credit sale is 6,40,000. Total amount to be received is 8,10,000. Out of 8,10,000, discount allowed is 6,000. Your bad irrecoverable is 5,000. Sales return by customer is about 10,000. Cash collected because they have given the closing balance. This is missing. this is missing. So missing figure is nothing but 5,89,000 that is collected from the debtor. So what is missing? Cash receipt. Closing balance is generally a debtor account is prepared for two purposes. One for calculation of closing debtor or cash collected from debtor. As per this problem, they have given the closing balance. So the difference is cash collected from the debtor, which give an effect to in the what's called the branch account. I will explain that. Come back working note number 2. So your petty cash at the beginning is 6,000. We received from the head office how much money? 8,000. The total amount available is 14,000. We can spend to the extent of 14,000, but expenses paid at the branch only 9,000. So we are not utilize how much money? 5,000. That is left with the branch only. This is called closing petty cash account. How it is? At the beginning, you have got 6,000. How much you received? 8,000. Totally 14,000. How much money spent? 9,000. How much left over? 5,000. Come back to furniture. What is the opening value of furniture? 40,000. How much depreciated? 10%. 4,000. Balance sheet at the end is 36,000. So now we'll go with the problem. Problem always start with the opening balance of asset. What are the opening balance of asset? One is the stock, one is the debtor, one is the petty cash, one is the furniture, one is the what's called prepaid, any prepaid. Here, opening stock, invoice price, opening petty cash, opening debtor, opening furniture, opening prepaid. These are all the opening balances. Which are the opening balances? Opening stock, opening petty cash, opening debtor, opening furniture, opening prepaid. So goods sent to branch as per the invoice. When who sends this? Head office will send the goods to branch account to the extent of 15 lakh. Then expense of the branch met by the head office. Whatever the expenditure is there of the branch paid by the head office, one for rent 48,000, one for salary 82,000, one for petty cash 8,000, totally 1,38,000. Whatever the goods sent to branch is here, opening bank, loading on the return goods to them. How much return goods to the head office? 1,20,000, which includes the invoice price. 20 by 120 of this is 20,000. Then you got a closing stock. Loading on the closing stock is 2,40,000 is there. If we see that your closing stock is 2,40,000 is there, which includes the stock reserve. 20 by 120 is 40,000 rupees. Come back to credit side here. By stock reserve on opening, your opening stock is 3 lakh. 20 by 120 is 50,000 is a stock reserve. Opening stock on the debit side, stock reserve on the credit side. Goods sent to branch on the debit side, stock reserve on the credit side. Closing stock on the credit side, stock reserve on the debit side. Goods returned on the credit side, stock reserve on the debit side. Here, same thing. Here, goods sent to branch 2,50,000. How much we have got? 15, which includes the invoice price 106. 20 by 120 comes to 2,50,000. By closing stock here, closing balance, stock, invoice 2,40,000, petty cash as per the working note is 5,000, debtor as per they already give the closing debtor how much money? 2 lakh is given. Then furniture as per the working note is 36,000. The total on the credit side is 26 lakh 11,600. The difference will work out 3,96,000. That is the profit of that particular branch. So only difference will be the invoice price and the what's called the cost paid regarding the stock reserve. So how it is stock reserve? Rate 100 plus rate. So stock reserve will goes to in favor of opening stock, closing stock, goods sent to branch, goods returned by the branch. How will be 2 opening stock by stock reserve, goods sent to branch by stock reserve or loading. Come back by goods returned to head office, debit side stock reserve. Then by closing stock, stock reserve. 4 items. Opening stock, stock reserve. Goods sent to branch, stock reserve. Goods returned to head office, stock reserve. By closing stock, stock reserve. How stock reserve is then? Cost plus profit. What was the profit? Rate 100 plus rate. Here rate is 100. Your rate is 20. 20 by 120 is 1 hour save. So you have to adopt for the 4 item. 1 for opening stock, one for the closing stock, one goods sent to branch, one goods returned by the branch. Hope you understand. I've explained very detailedly. So definite problem for 15 marks. So in the next session, you already explained one without invoice. Today I solved this session. I solved the problem with invoice price. Only 4 items you have to remember: one on opening stock, one on closing stock, one goods sent to branch, one goods returned by the branch. Remaining things in. So definitely it will come from the examination for 15 marks. So in the next session, we'll have some more problems on the investment. Till then, goodbye. Meet in the next class with another problem.